Sell stocks now. I'm your host, Steve Metre, and thanks for joining me today. And Goldman is warning investors that they need to sell stocks now as a massive systematic sell program is about to begin. And we've been talking about how these machines, who are big buyers of equities, have been leveraging up as momentum in the market moved higher. They're now sitting at near extreme positions. And Goldman's case now is, if momentum in the market fades, which we're going to look at in today's show, that they are going to be a massive seller of stocks. Of course, we're going to look at the other side too, and how perhaps the Fed could engineer one last big move in the markets. Plus, we'll take a look at how the bond market is coiling for a major reversal to send bond prices higher. And we got an update on gold and that triple top we talked about. As many as you got right, I misspoke last week. We're going to look at that 100-ounce drop, not the 1,000-ounce that I misspoke. Let's head over to Goldman, where he picked today's story up. This from their tactical flow of funds report that notes systematic future strategies estimate that CTA and trend following strategies. Now, if you're new to the show, these are just black box machines that trade on price level. As price goes up, they buy more. But what's key is they have a huge arsenal of buying power behind them. They bought $142.5 billion worth of global equity futures over the past 1 month. And get this, their current position on the long side is $116.8 billion. That's in the 95th percentile on a 1-year mark. We're going to see more of that. Look at this. Vol control strategies have bought $24 billion of global equities over the last 1 month, now sitting at the 100th percentile on a 1-year rank. Look at this. Now, we look at risk parity, 100th percentile on the 1-year rank. Goldman is telling us that total systematic strategies have purchased a whopping $173.8 billion worth of global equity futures over the past 1 month. So you see that they've leveraged up, and this is what the machines do. They see the trend, and they're such big buyers that they can actually make the trend and accelerate it. But the problem is, if retail, institutional, other investors don't come in and drive the market higher and momentum wanes, well, then what happens is the machines try to lock in those gains and become big sellers. Here we can see the flow simulations. Again, this from Goldman, looking at a flat tape. So what that means, if stocks go sideways this next week, they're only buying about $6 billion of equities, not very much. If markets go higher, and I want you to see that these machines are nearly tapped out on the position, because even if markets go up, they're only looking at about $6.4 billion to buy. In a big move higher, only 8.8. That's not a big number. In a down tape over this next week, $7.7 billion to sell. Big down, $38 billion to sell. But here's the warning. Here's where Goldman is saying, look, if we look over the next 1 month, the only thing we've got, if we're going to talk about this, the other big buyer is corporate share buybacks. We're going to look at those in a moment. And they're saying, look, if momentum turns to the downside, look what could happen to these machines if there's some potential bad news. In a down tape, $158.5 billion to sell. Look at this in a down big tape, $276.3 billion to sell. That would really be a big move down in the market that would drive these machines to sell. And then, of course, they would just exaggerate that move to the downside, potentially taking stocks down quite a large number. Now, let's take a look at these corporate share buyback blackout, because that window opened up on Friday. We talked about that. What happened? We saw the market surge higher, maybe because of corporates. But what they're seeing from Goldman is a decline in executions of about 40% year over year. They note that authorizations are still fairly high at $375 billion, the second best year ever. But they're kind of asking is, are these companies holding off on their repurchases? Are they waiting? We'll find out soon enough, because if we don't see these corporations come in and buy, if we don't see retail come back or institutional come back, or maybe even hedge funds, then all of a sudden the momentum of the market will start to turn to the downside, and then we can get what Goldman sees as a pretty darn bad scenario where the machines are just unleashing into a fairly illiquid market. Now we can note this from Nomura that they are maxed out on the long side too. TD is playing chase to the upside, but they're not got a lot left. Notably over 4,150 to buy on the S&P. I realize it is higher than that as of the close on Friday, but that's the last signal we have. Under 4,033 to sell. That's the 50-day moving average. Let's take a look at our momentum screens. Let's start out with the S&P 500. We got an RSI at 61. That's good, but it's trending sideways sideways. MACD is giving us a negative cross, saying momentum is moving to the downside. Our proprietary report, Momentum Timer Pro, which is part of the Markets Insider Pro bundle, $60 with the coupon in the description below. You get Tracy's shoe charts and Jeff Snyder's research as well. Only 2 consecutive buy signals. After putting out a bunch of those buy signals, it's starting to say momentum is waning as well. On March 30th, we set a buy at open at 404. Friday's closing still up. We do think the next upside target's 429. I think we'll find out this week on the Fed. Downside target is a 50-day moving average. And here's from our CTA-Timer Pro report. Many of you just absolutely love this because what it's done is it's telling you, and we'll look at the charts to pull off some of that risk. It's kind of leading what we see these machines doing. It gives us a fast version, a slow version. The fast version saying it's pulled off that 100% long down to 35%. And the slower version where we see more money traded is now 55% long. What makes CTA-Timer Pro unique is it has a historical overlay. It figures out where the machines are going before they get there. Now let's take a look at the charts. Let's look at the bull case and the bear case on both this. So here we are on SPY. What is the bull case? Well, it's pretty obvious. We're sitting at this battle line here. We talked about last week how these are soldiers racing against, and they're running into the battle line, and they're getting rejected, so they're getting pushed back. And what are we seeing here is big thrust coming up Thursday and Friday. After Tuesday and Wednesday the market sold off, it needs to break through here. But what's notable, the next battle line isn't up in here till, say, the earliest one is around 429, our next upside target. And we can look at some other things. We crossed the 50-day. We didn't quite reconfirm it in an ideal way, but we did eventually, broke it again, and so it's still trending above the 50-day. We're above the 200-day, and now all of a sudden we just need to break through here to the upside. If it does that, then you got a quick move to 429 and maybe all the way up here to 450. Fed could be your catalyst. Now, on the bear side, what do we note? The MACD, your moving average convergence divergence strategy. What does it say? It said momentum is not getting back up to those previous peaks. We're even seeing the RSI not getting to overbought territory and momentum starting to turn down. So some risk here that really kind of set the stage for the potential big move down over the next few weeks if indeed we see momentum wane. Now let's take a look at what we've got on QQQ. We have a similar story, but remember, a lot of these tech companies have much bigger authorizations to buy back their stock. They could be the driver of the market here. What do we know? Momentum is positive. The RSI is at 62. That's good. MACD, though, same as the S&P, negative cross. Momentum Timer Pro, after a string of buy signals, now on picked up a few sell. I only have 2 consecutive buy signals, but look, CTA-Timer Pro is saying, look, on the long end, they're buying up on Friday. They did. But look at this on the short end. They're saying, look, these machines, if momentum doesn't turn, they're going to start selling off, and if it moves higher, watch, this will start moving back up. So it's a great report. It will help you stay on the right side of the market and know where the machines are at. On March 30th, we had a buy at open at 315. Friday closes up. Upside target 334. Downside is the 50-day moving average. Let's take a look at QQQ here. And what do we see? A similar story looking to break out. It's almost starting there, and we can see that move up in here potentially to 329. And then the next big battle line where we see sellers at is 344. So kind of going into the futures open tonight, it'll be really interesting to see heading then and to the Fed meeting on Wednesday, how market participants handle this. Do the sellers come out or are they back off? Because if they back off, there's your upside move. You would look to take that move to the upside and then sell it at the next crossing line when we see the sellers emerge again. Otherwise, watch out, maybe push your stops up a little bit, put on a trailing stop, and hope the market hangs on before these machines turn to sellers. Now let's take a look at the bond market here. Because what we see in the CTA positioning, nothing real changed. Nothing's changed at all much. Under 3.3% on the 10-year to buy, 3.4% to sell on the 10-year. TD Securities still slightly net short on their positions. And here we can see an ascending triangle reversal. We dug out the technical analysis book again. Many of you love that. Just as a descending type of right triangle forecast a reversal of an upward into a downward trend, the ascending triangle forecast a reversal of a downward trend into a stage of markup. This is kind of what we're seeing. Everything we have noted above in our study of triangles applies as well to the ascending when it occurs in a downtrend, although the forecast, of course, is reversed. So let's take a look at TLT. We see momentum is positive. The RSI is at 54, so it's kind of been sideways, much like the equity market. We notice the MACD has a negative cross, but just flipped to a one daily buy signal then on Friday. On March 20th, we have a buy at open. We're just under that. I told people to hang on to. Notably, we hit our upside target within 1 cent. How crazy is that? Downside target is 102, upside to 109. We know we're seeing that the machines are looking to push long here. CTA-Timer Pro suggesting the machines that are still short are on the wrong side of this and will need to move higher. We can look down here at Momentum Timer Pro. On the 1 month, we're still holding a minimum buy signal, the 3 month on a minimum, and the 6 month on a mid size. If price turns higher, look for this 1 and 3 month windows to move higher, which is consistent with what we're seeing on chart here for TLT. And we can note, I kind of move this line up, as many of you will see and probably note, and you start to see this looks like that right triangle then flipped upside down. What we're looking for here is some point, a break above this roughly 109 level that will send prices higher here. And you can see it's kind of coiling right in there and then it's coiling inside a smaller one. We had a little bit of a bear trap and then kind of a second bear trap that got down to the 50-day moving average. Prices gapped up and ran on Friday. Here you can see that 6 month volume profile or 1 year volume profile line. Let's zoom into the 6 month, and what do we know on the MACD? We know it's starting to push higher, momentum build up. We see the RSI, it's moving higher, and if you can get over the 6 month volume profile, break over that 109, price on bonds are looking to make a big move to the upside. Let's take a look at KBE, or bank ETF. Now, this was getting beat up due to First Republic, but they're gone now. So let's take a look at this. This is a pretty high risk call that we put out on a buy at open at 36.33. It's sitting at 36.63. Upside target remains the 50-day moving average. We're saying if it gets there, sell those positions. Downside target's around 35. And we note that, of course, the long-term picture here, the machines would be 100% short this on the slow side, but on the fast side, they're at 15% long now, looking to push up. Momentum's been building. We can see this in Momentum Timer Pro, looking at 1, 2, 3, 4 buy signals out of the last 6, and we see it's on a sell minimum on the 1 month, potentially looking to move higher. And I'll show you why I think, again, this is a high risk trade. If you're not comfortable, don't do it. And if you are, use stop losses. But remember, after a lot of bad news, investors are afraid to buy. They turn out to be sellers. Look at this on the 6 month window. Here you see staying right under that sell line, the volume profile. I think the upside move is the 50-day moving average. Let's zoom in a little bit. And what do we see? The 90-day, you're seeing buyers and sellers right there at that same point. Let's dig in a little deeper. 30 days, they're right there as well. How about the last 10 days? And there they are. So this has the potential to make a quick move to the upside. And again, if you see that get to the 50-day, that's probably where you want to sell it. Note the RSI is building here off massively oversold levels, as is the MACD, both showing that momentum is indeed moving higher. All right, let's take a look at gold now. As I've been warning, this thing's getting maxed out. Sure enough, now we're seeing the CTAs are at max long positions, selling now below 1965. What I'm saying is 100 ounce, not 1,000, as I misspoke last week. 100 ounce, and think all of, I want to say here, I really appreciate all of you who understood that I made a mistake. This tends to happen when you film an unedited show. I typed out $1,000 an ounce in the headline, which thank you to my fans who pointed that out quickly so I could fix it, but that got stuck in my head. That's what I said, but we noted on the charts I never showed that big of a move. There's no way that's going to happen. 100 ounce move still in the table here, and we will look at this because we've got a triple top as we talked about last week. Let's look at here. Momentum's negative. The RSI is slowing down at 52, so it's coming off those big move up, negative cross on the MACD. So everyone is calling for gold to go higher. Momentum leads price. Here we can see one consecutive daily short, so I should say sell signals. Don't know where I got that from. Again, because my firm is not licensed to talk about shorting, we just say look for one. You decide if you like to short. If you see that opportunity, we say you do it, but use stop losses. We're not going to give you a signal on that. Upside target remains the recent all-time highs at 194.45, and next downside target at 179.55. This on GLD. Notably, again, our CTAs are saying, look, 35% long on the short algorithm, 100% long on the slow one. or on the fast algorithm suggesting the price is heading down. Look at Momentum Timer Pro. It's maxed out on the 1 month, a minimum on the 3 month, and maxed out on the 6 month. And we're starting to see a momentum move to the downside here, again suggesting that price on gold is likely to head lower. Let's look at gold futures here, and what do we see is kind of rounding top here. The next move will be to the 50-day. Here's that 100 ounce, what we're looking at, move down to around 1920. If you zoom out over the last 5 years, what do you see? It gets up to these levels and loses steam and comes down. That remains our call. And I know, very unpopular. I know. I see the comments. How about the dollar? Momentum remained positive. RSI is sitting at 47. MACD's got a positive cross. 9 consecutive daily buy signals. We say no position because dollar doesn't move much unless you're a currency trader. This is interesting, but for most people, it is just not. It's more of an informational thing, not to worry about a trade unless you like trading currency. And then I say, hey, take it and look at it. We see a move up to the 50-day here as the next potential on the DXY. You trade this under UUP. You would note the MACD is crossing over and starting to move up. Still needs to get into that positive territory over the baseline. The RSI is just trending sideways, but hopefully looking to move higher. We can see this as a potential bottom here on the dollar, and then a consolidation, maybe a move higher. We'll see what happens. If that happens, again, there becomes, kind of your bear case for gold, and why we think, again, it could down to that 1920 an ounce, consolidate there, and likely a move lower after that. Again, I know, very unpopular view, but I still love having all of you as fans. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.